There has never been a greater time than now to invest in the Metro Detroit area, and there is no other investment firm better qualified than Platinum Real Estate Holdings. With 40 years experience and over 1,000 homes sold, let Platinum Real Estate Holdings assist you with the purchase of a city-certified home of the highest quality, turnkey properties, screen renters, yielding instant cash flow. Well, what are you waiting for? Call or visit us online today. Welcome to the weekly recap for the week of May 9th. In today's recap, we're going to discuss why the self-storage industry has become one of the hottest ways to invest in real estate and how you can get involved. Secondly, talk about how to calculate the income you need to rent an apartment. And lastly, predict the future of mortgage rates. This week's recap begins now. Self-storage is really a hot way to invest in real estate. You've got stuff to store? What do? Answer: rent a 10 by 15 storage unit for about $100 a month and stick all the excess stuff there. The self-storage business, as commercial property goes, has none of the sex appeal of a gleaming office building or a ritzy shopping mall. However, there are more than 50,000 self-storage facilities in the U.S., nondescript warehouses filled with cubicles where Americans keep the belongings that don't fit in their homes. According to the experts, it turns out to be a pretty solid investment, often better than other kinds of real estate. Why, you may ask? One of the reasons is it is said to be recession resistant, although many of the exciting types of self-storage investments are restricted to only the wealthiest investors. The good news is any ordinary investor can now get in on this trend today by purchasing shares of a real estate investment trust, or REIT, that concentrates on the self-storage industry. The biggest real estate investment trust owns vast pools of commercial property, such as offices, shopping centers, or in some cases, self-storage facilities, sometimes strewn across the country. Their publicly traded shares usually offer nice dividend yields, paid for by tenants' rent. The largest self-storage REIT, just for your information, goes by the name of Public Storage, founded in 1972 by B. Wayne Hughes. The company has 2,200 locations in the U.S. and Europe, with 142 million square feet of rentable space. You see, unlike buying and selling a building or a stake in a self-storage property partnership, trading in and out of real estate investment trust shares is as easy as buying and selling stock on the exchange. Of course, there is no perfect investment. However, according to the numbers, self-storage is one of the best. During the early 2007-2008 financial crisis, most real estate investment trusts got walloped too, but not self-storage. According to the industry trade group called the National Association of Real Estate Investment Trusts, self-storage was the only REIT sector to post a positive total return of 5%, including dividends. That's quite a distinction, sort of like being the last contestant standing in the show called The Voice. In 2015, a flat year for stocks in general and a so-so one for equity REITs as a whole, self-storage had a soaring performance of plus 40%, blowing away all other REIT sectors. This year, self-storage is in third place for returns among REITs. So far, we've been talking specifically about publicly traded real estate investment trusts. However, there are also private REITs as well. With a private REIT, you cannot cash out your investment instantly as you can with a public REIT. You typically are locked in for a set period, maybe up to 10 years, although some allow you to withdraw piecemeal after a while. The advantage is, for example, the REIT doesn't have to worry about having to sell off properties to cover redemptions in a panic market. As a rule of thumb, if you're a wealthy, patient investor who values the idea of being involved with others like you, there may be a play here for you. However, publicly traded REITs are probably the safer bet for most investors. That's because they're closely followed and are more transparent. Plus, there are no upfront fees to purchase them. As you can see, the self-storage sector has a lot of good news around it. Its key demographic driver will be strong for some time: the retirement of baby boomers, which is leading a lot of home downsizing. Even small businesses have awakened to self-storage as a great place to store excess inventory for less money than maintaining a warehouse. Other advantages of self-storage is that it involves little capital outlay as compared to other kinds of commercial real estate, such as malls or offices or apartments. It also needs precious little upkeep. When an occupant moves out, management doesn't have to repaint or fix the plumbing. All that's needed is to sweep out the now empty unit. Break even for self-storage is just 45% occupancy, far below that of other sectors. Since 2012, the National Association of Real Estate Investment Trust figures show the net acquisitions in the self-storage realm have soared to $8 billion, with $2 billion of it last year. In short, self-storage real estate investment trusts don't look ready to slow down anytime soon. That makes them truly a great value, seemingly for a long time to come. Now we want to move on to answering the question, how do you know what you can afford when it comes to renting an apartment? The answer, your gross income should be 3 times the cost of the lease. As rents have continued to increase at a relatively high rate these past few years, it's worth examining what income levels are required to rent certain types of apartments in different metros. The real estate firm Axiometrics categorizes apartments as Class A, Class B, or Class C, depending on their effective rent level in the market. The top 20% of the apartment properties based on their effective rent level are Class A apartments. The middle 60% are Class B, and the bottom 20% are Class C. To keep your rent to income ratio at the same level, your income growth would have to be at least equal to the growth in rent levels. One of the most extraordinary increases for rent levels over the past 2 years is in San Francisco, with double-digit rate increases from 2014. You now need to make $115,000 minimum for a Class B apartment. Atlanta, on the other hand, is considered affordable compared to other major metros. But Class B rents in Atlanta have increased 15.9% too in the past 2 years. The renter of a Class B Atlanta apartment now pays an average of $991 for the same apartment that would have cost him $855 in 2014. Knowing how much of an apartment you can afford can help you move forward with confidence. And lastly, let's talk about mortgage rates. Mortgage rates remain steady as Yellen and Company prepare to meet. Mortgage rates held near their recent low this week, with a 30-year fixed-rate loan averaging 3.59%. A year ago, it was 3.65%, according to Freddie Mac. As Janet Yellen, Federal Reserve Chair, and her team meet next week, expectations are that rates are not likely to rise again yet. Why? Yellen and Company are worried about weaknesses in overseas economies, including Europe, where central bankers said they would keep their own interest rates below zero. Negative interest rates make saving more expensive than borrowing. These negative interest rates are meant to stoke spending and give a lift to a fledgling economy. Cheap borrowing has given a lift to the United States housing market, but mortgage rates have been so low for so long that home buyers don't feel pressure to sign purchase contracts because they're in a rush to lock in low rates. Although rates flirted with historic lows, house hunters couldn't find anything to buy because inventories of homes for sale have been retreating for more than a year, leaving home buyers in a bind. Even though the cost of a home loan ticked up slightly this week, the good news is mortgages are still really cheap, and they'll probably stay that way for now. Well, that's this week's recap. If you have any comments or need any advice, please let us know in the comments below. Thank you for listening and have a great day. This has been your weekly real estate investment news recap. Did you find this recap helpful? Please like or comment below this video to enter to win a free copy of our ebook, The Ultimate Real Estate Guide for Residential Real Estate Investments. You can also subscribe to our channel or go to our website to receive the latest in real estate news. Our website also affords you the opportunity to view our latest turnkey properties.